Okay, let's just jump right into it. The entire global economy is, well, it's sitting on a kind of financial time bomb. All around the world, governments are borrowing money at a pace we have never seen before, and it's created a situation that is deeply concerning. And the scale of this, it's just staggering. We're talking about hundreds of trillions of dollars in global government debt. Honestly, it's a number so huge, it's almost impossible to even wrap your head around. And what's crazier is that it's growing every single second. But that brings up a really big question, right? It's the main thing we're going to try and unpack here. If everybody knows that this much debt is dangerous, why on earth did they keep doing it? Why keep borrowing more and more? What is driving this train?
To get to that answer, first we really need to understand just how dramatic this whole debt explosion has been, because the evidence, the stuff behind the headlines, it tells a pretty stark story. Now, this slide right here tells a critical story in just one glance. See those two bars? On the left, that's global economic growth, and on the right, that's the growth of global public debt. According to the IMF, our debt isn't just growing, it's growing way faster than our economy is. Put simply, we're piling on debt faster than we're creating the wealth to actually pay for it. And look, this isn't a problem that's just happening in one or two small countries. We are talking about the heavyweights here. The United States, China, Japan. The world's biggest economies are all dealing with record-breaking debt. Japan, for example, has one of the highest debt-to-GDP ratios in the entire world. You hear that term a lot, right? It just compares a country's total debt to its entire annual economic output. It's kind of like your personal debt being twice your yearly salary. It's a huge red flag.
All right, so we've established the what, this unprecedented mountain of debt. So now we get to the real mystery. Why? What is pushing governments to keep borrowing like this? Well, a lot of it boils down to the basic things a modern government is expected to do. Countries borrow to pay for stuff that citizens rely on, social programs like healthcare and pensions, big infrastructure projects like roads and bridges, and just generally to keep the economy growing. So it's not all reckless spending. A lot of it is seen as absolutely essential. But the thing that really threw this into overdrive? Crises. This timeline shows the two biggest accelerators perfectly. Take a look at 2008. The global financial crisis hits, and governments had to borrow trillions to stop the entire banking system from collapsing. Then, boom, fast forward to 2020, the pandemic. They did it all over again with these huge stimulus packages. In those moments, borrowing wasn't really a choice. It was seen as the only thing they could do to prevent a total catastrophe.
So governments clearly have the motive, but they also need the means to do it. And that's where another key player comes into the story: central banks. You could almost think of them as the enablers, or as the slide says, the accomplices who made all of this possible. You see, for the better part of a decade, powerful institutions like the U.S. Federal Reserve kept interest rates at basically zero. This created an environment where borrowing money was incredibly cheap. For governments, it was like a massive, never-ending sale on loans, which made taking on huge amounts of debt seem totally fine and manageable.
And this right here is the crucial point to understand. When interest rates are low, paying the interest on your national debt, that's called servicing the debt, is pretty easy. But when rates start to rise, which they have been doing, suddenly the cost of servicing that same debt just skyrockets. What used to be manageable quickly becomes a source of really dangerous financial pressure. And this is where things get really dicey. Once a country's debt gets too big, it can get stuck in this dangerous cycle. A place where borrowing isn't just a policy choice anymore, but an absolute necessity just to survive. This is what's known as the debt trap. And it is exactly what it sounds like. A country gets so deep in the hole that it has to take out new loans just to make the interest payments on its old loans. At that point, you're not borrowing to build anything new. You're just borrowing to stay afloat. And it's not just a financial trap. It's a political one too. It becomes so much easier for politicians to just keep borrowing and kick the can down the road instead of making the painful spending cuts that they know voters will hate. And if you think this is just some abstract theory, It's not. We've seen this happen. During the European debt crisis about a decade ago, countries like Greece were caught in this exact trap. And the result? Severe financial instability, massive international bailouts, and incredibly painful economic reforms forced on its citizens. It is a very real warning of what can go wrong. So, with all that in mind, the huge question every economist is asking is, where does this all go? What happens next? Let's take a look at the 3 most likely ways this could play out. Okay, so first, there's the optimistic path. The idea here is that the global economy just grows so fast that the debt, even though it's still huge, becomes a smaller and smaller piece of our total economic pie. The second path is inflation, where governments kind of let prices rise, which slowly eats away at the real value of their debt. And then there's the third and most dangerous path, a major financial crisis that forces a painful reckoning, like debt restructuring or brutal reforms. Now, I know all this talk of trillions of dollars and global finance can feel pretty abstract, right? But this issue has very, very real consequences that connect directly to your wallet and your daily life. How? Well, for one, high government debt can directly influence the interest rates you pay on your mortgage or your car loan. It can also fuel inflation, which makes your groceries and your gas more expensive. It could lead to higher taxes down the road to pay for it all. And ultimately, it can affect the overall stability of the economy and, your job security. So in the end, we're kind of left with this thought. Right now, the whole system is holding together, but history is just filled with examples of these kinds of financial imbalances that build up quietly for years before they suddenly don't. Whether this time is different is one of the biggest open questions of our time, and the answer is going to shape the financial future for all of us.